Talk about it all with Chris Retzler. He's Needham Growth Fund's portfolio manager. And Chris, you're a growth stock guy. You've had great performance, by the way, I should point out, in your main fund. What do you make of a market like this today, particularly that move in the Treasury, and whether it's indicative perhaps of a slowdown overall in worldwide growth?
So I think days like today are painful for investors, but I think you don't need to overreact here. We're in the summer months. Volumes are a little bit lighter and volatility's higher. We're going into earnings in the next couple weeks, and I think you really have to focus on the fundamentals of what companies are going to share with us and their forward guidance. Is revenue growth going to decelerate and not be as strong? Are margins going to hold up? How are cash flows coming in? Those are all the things that we as a fundamental investor are going to be looking at. And I think for longer-term investors, this is the time to be doing due diligence, looking for those good stocks that can continue to grow through even some form of a deceleration. When you look at the bond markets, I think everyone all week has been really trying to figure out what is causing this compression of yields. And I think there's just a lot of different answers out there. Some of the smartest people I've spoken to say that there's, people caught on the short end of being short bonds and those trades are unwinding. Is growth peaking? And so it's less inflationary. I think it's yet to be determined what really is driving it. And I think you need to be patient. But I think inflation is still here for a period of time. I think it's going to be here for about the next 12 months. And again, you have to be cautious. Don't overreact and pick good stocks.
Yep. Listen, your point on the bond market's an important one, because I've been hearing the same and trying to find it out. And to your point, everybody's got a different explanation, but nobody really knows. Specific to equities themselves, and obviously your long list of things that you own in your holdings as of at least the end of last quarter. China has been a real concern. I don't know how it figures into many of the companies that you own, but are you thinking about it? Is it a concern for you in terms of both the growth over there, but also the increasing tensions when it comes to the capital markets between our two countries?
So where we invest with China is more tangential, selling picks to the miners. So semi-cap equipment is really the way we play that. There's clearly a national plan to build out their semiconductor industry. And most of that technology is really held by Western companies. So we think that that's still something that they're going to be working on. The shortages are going to continue to persist into next year. And you're having a separation, of technologies. And I think China wants more independence on that front. With regards to some of the companies that have been hit hard within China, we tend to spend more of our time domestically where, we can rely upon GAAP accounting as opposed to the accounting that comes out of China. So more cautious on those names in China, but you can get exposure through U.S. companies.
Shepard Smith here. Thanks for watching CNBC on YouTube.